Alright guys, in this video I will discuss a little bit about credit spread and ratio spread. So basically I already placed my order. So I think 50% of entire my capital I use as a investment, and after that I protect it by using option. Alright, so another 40% entire my capital I use only option. So you can say like an optional writing, and the rest of the 10% capital I use as an intraday option buyer. Okay. All right. Let me show you where exactly I place order. So I place in Reliance, Axis Bank, Asian Paint, Hindustan Unilever, and TVS Motor. Okay. So specific stocks, and I use specific option writing strategy. So Reliance and Axis Bank, I use ratio spread. My direction is bullish. So me and my student all are placing together. All right. And another Tech Mahindra watch list, and another Asian Paint, Hindustan Unilever, and TVS. I place credit spread, my bullish direction. And when I deploy 28, 24, 28, 4th, and 26 April. All right. So basically, I holding my position for 30 to 40 days. So I place order, which is called 30 to 45 expiry. All right. So it's going to expire on 25th May this month. Okay. So let me explain one by one. First one, I use Reliance. Let me show you Reliance. Reliance Industry, India. Okay, perfect. Now let me show you 1 hour time frame, and I place order. I think here at 28. Okay, 28 April. So here I can see after getting a confirmation. So what strategy I use? Ratio spread. What is the meaning of that ratio spread? This is credit spread, and this is called a ratio spread. All right. So in the downside is undefined risk, and upper side is purely protected. All right. So means stock price is somewhere there in this area. If price drop, so I'll be profitable. So when I got the information or confirmation in this candle, here after breaking this area and getting this confirmation, I think around 11. So I place order, buy order, and my target is if price close exactly near below my opening point, so I'll be more profitable. All right. So if price goes like that, I'll collect little bit amount. So very interesting. All right. So let me explain. So I place here at that day, and right now price are somewhere here. If price goes up, so means it's a purely protected. I'm not going to lose anything, but I'll collect. I'll get some profit. But if price goes beyond my entry point, so that was my entry date at that price. Okay, if price drop here, I'll be profitable until they break this level. All right. So this is the method. Okay, so I'm a bullish. So same strategy I'm using another. This is Axis Bank. Let's see, Axis Bank. Okay, this one. And at 24th April, 24th April, I think 24th April. Yeah, 24th April in this area. Okay. Here I place order, but price goes up. If price close below this level, I'll be profitable. This is the actual strategy. All right. Upside is fully protected, and the downside is undefined risk. But if price drop drastically, I adjust it. So this is another way. Okay. It's right now price is going toward my direction. Okay. So another I use Asian Paint, that is credit spread, and 28 April. The same day I use Asian Paint. I use credit spread at 28 April. Where is 28 April? 28 April. Okay, here. All right. So it's a clear uptrend, and there was confirmation after that giving a pullback, and I exactly here I enter. But I use here. This is called credit spread. What is the credit spread? Okay, how look like that? Let's see. This is called credit spread. So if price goes towards upper side, so my profit will be fixed. All right, if it goes, that is also protected. Okay, so it's more than 70 to 80% winning ratio. So I enter here, but price goes up straight. All right, toward the north. So definitely I'll be profitable. Okay. And another one that is called Hindustan Unilever, and I placed 4th May. Hindustan Unilever, I placed order 4th, 8 May, 4th May. Okay, 4th May. Why I placed here by order 4th May? Let me show you daily time frame. 4th May, I think 4th May, 2nd May, 4th May. Here you can see in this area it's a bouncing of this moving average, and I get confirmation. So that is why I place this is called credit spread somewhere 4th May. Yeah, somewhere here. All right. Once they cross this moving average, so it's I'll collect my profit. I think I'll close my position. I think 18th May, before 1 week expire. All right, it's going to expire on 25th, and I'll close my position. Okay, and another previous motto, PBS, but less liquidity, but I have to close this position. All right, so and when I place order 26th April, I think here 26th April. Okay, perfect. 26th April. Once I get the confirmation, I place credit spread. Okay, in this area. So how clear? How uh, what is the winning ratio? You can see this all of strategy. They are more than 70 to 90%. Sorry, not this one. I don't control. 70 to 60 to 70% winning ratio. So basically, we place uh, order which have 30 to 45 to expiry. Okay, so this is my position. So still I'm waiting, but rest of the another strategy like big lizard, just lizard, implied volatility is too high. So at that time we are placing. But right now, at that time when I placed this order, there was low implied volatility percentile. So that is why I placed this order. Another Tech Mahindra, this is watch list. I just waiting to get confirmation. Tech Mahindra, M, Tech Mahindra, okay, Tech Mahindra. Okay, perfect. So here I can see this is a sharp move up. That means the big boys are building the order. So mastering program 2.0, I explain everything. When big boy are placing order, they're building their order. How we get the confirmation. So here I can see we get the confirmation. Tech Mahindra building his order. So I think this move are doing by the big boys, not the retail trader. All right. So after that, they are for building their order. So once I get the confirmation, I'll enter. So here I will use credit spread also. So we'll take implied volatility percentile on Tech Mahindra. Let me show you like Opstra. Okay. Okay, Tech Mahindra. Option, go to option chart, option dashboard. Where is on dashboard? We'll see the Tech Mahindra. Okay. Where is the Tech Mahindra? If they are, it's based on implied volatility percentile. Okay. Let me charge the Tech Mahindra. Tech Mahindra. Tech Mahindra implied volatility. Check it. So it's a very low. So that is why I'll focus in a buy direction. Okay. So I hope you enjoyed this video. How exactly me and my student are placing order. All right. So everything we are discussing. So I hope you enjoyed this video. Thanks for giving your valuable time.